really understanding and communicating and being open. I think, that's the first step, right? If you're the type of person who wants to, not be transparent and hide the numbers and hide behind that spreadsheet, that may not be the best partner to line up with. I mean, for me, I love communicating about, exactly what we're going to do, what the plan is. And, the numbers are one thing, but I also have to like the person I'm going to be working with, right? Especially if, whether it be an investor as well, right? I mean, we're taking on these larger deals. And if there's an investor who is just consistently unhappy and has multiple different asks that are just unreasonable, that might not be the investor that we want to take on.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik, and with me, as always, is John Cohen. How are we doing, brother?
We're doing good. We are rolling. I got no complaints. I was at a surgery yesterday, and I am back at it and feel great.
Nice. No problems. Nothing major.
Nothing major. Actually, I feel significantly better than what I was told I was going to feel. So they said it was going to be relatively painful and not fun, but I feel good. I feel great.
That's good. Make sure you check yourself. Make sure they didn't leave anything inside. You'll be all good to go.
I had a pain down my leg, and I was like, well, that's nowhere near this surgery, so they probably fucked something up. But no, they said it was normal, like where it radiates from. And I was like, yeah, I know, but like my foot feels like I have to cut it off. So, but be that as it may, no, we are feeling good. We are ready to roll.
Awesome. Love it. Glad to hear it. All good stuff. But let's just jump right into the episode. I'm excited to have our guest on. We were just chatting a little bit before we started recording, so I think it's going to be a lot of fun. Excited to hear his story, learn a little bit about him, and just chat. So that being said, Apurva, thank you so much for jumping on, bud.
Yeah, thank you for having me.
So kick us off. Tell everybody a little bit about you, your background, all that good stuff.
Awesome. Yeah. So I'm Apurva Shah. I'm a managing partner for Jay's Properties. So we primarily invest in mobile home parks and apartment complexes all over the Southeast. Primarily focused actually in North Carolina right now as the major metro areas, and it's been definitely a growing area. So quick background outside of Jay's Properties is I grew up around real estate. My family they convert office buildings into luxury condos, so I learned a lot from my family. Really cool stuff on that side. It's a more of a smaller firm with the family, but I got to lead some projects in Syracuse, New York, and when I was in college, when I was in college, I basically got to lead a project myself in Syracuse. So it was a pretty cool conversion from full office mid-rise building to about 50 units in luxury condos. And then moved down to Raleigh, North Carolina. Like many other investors, started flipping houses and wholesaling them, built up the capital stack, and then fully converted into commercial real estate. And that's just been kind of the story, and loving it ever since.
Gotcha. Love it. I think that's really great. So were you ever working as something else, or you've always just been working in real estate kind of full time?
No, so yeah, my background is electrical engineering and robotics, so completely different than real estate. But a lot of the core principles from my day job, I still have a day job. I still have the W-2 income. I work for an engineering firm based out of it's a national company, but I'm a product manager for them. Develop modular substations. So for like utilities that have power infrastructure and things like that. So we put transformers and all kinds of different equipment on skids and send it out over to those utilities. So my background is more of that engineering side, but for me, I thought, hey, when I moved down to Raleigh, North Carolina, I said I would start off really small. I just wanted to buy a house or rent it out with my friends, and I never thought it would actually turn into something this large. We have a sizable portfolio now, and it's been a really fun ride. I'm just trying to continue to grow and scale this business.
Mm-hmm. Just curiously, did you choose to move to Raleigh, or did your work have you move down there?
Yeah, so my work had me move down here. For this company, since they have locations all over the place, I think my top two spots were Boston, Massachusetts, and then Raleigh was the second one. So I got the second choice, and it's count me blessed, right? I mean, it's been great because Raleigh's it was 7 years ago is when I moved down here, and it wasn't as hot of a market until probably the last 3 years. So definitely been great just trying to navigate this basically metro area.
Mm-hmm. And I think it's curious too, because how long ago did you move there? Just curious.
Yeah, it's been about 7 years now.
Okay. So, I mean, you've seen it more than me. I moved to Jacksonville 4 years ago, and I think probably the Carolinas and Florida are somewhat same in that regard. I mean, just the amount of people that are moving to these areas is quite honestly a little bit ridiculous. I don't know about you, but it feels like every 10 people I speak to, only one person is from Jacksonville, Florida. Everybody else is from somewhere else.
Exactly, right. So and that's actually leading to what's causing the compressed cap rates, especially on the apartments and mobile home park side of things, right? I mean, there's so many out-of-state investors, like from New York, from Maryland. Everyone's just moving down here because it's such a tech boom, right? I mean, there's companies like IBM, there's banks that are in Charlotte. I mean, there's some significant headquarters down here. And because of that, it's also creating a lot more jobs, and more people are obviously moving down here. And similar to you, right? I mean, for Jacksonville, Florida, I mean, it's just everyone wants to buy real estate, and whether it be flipping houses, starting off small, or it could just be these institutional buyers that they're just buying up everything that they can find.
Mm-hmm. Yeah, and that's what we were talking about a little bit before was John sent me an email this morning of this deal we looked at back in 2016 is Indianapolis. And it's like the rents are just way higher than we ever thought. They're higher than we thought they would be with us doing renovations, and they didn't spend a nickel. And it's now worth way more than we ever would have expected because of cap rates and because of that. And we're coming back to, then we kind of segued into a couple deals John and I know down here in Jacksonville. And, we're just scratching our head on valuations and making it make sense. And, that's what I keep coming back to of like, where I thought rents would be a few years ago and where they are today, it's like really tough. And it's like, I don't want to underwrite a deal with like 5-7% organic rent growth, but it kind of feels like those are the things that are happening. And it's kind of hard to buy a deal without putting those things on paper. But I would just feel really ridiculous putting that in front of an investor like, hey, we're not going to do anything and we're just going to increase income by 7%. And I think that's what's making it really tough to find deals right now.
Yeah, I mean, I feel like if I approached my investors and said, hey, we're not going to do anything, they'd be a little bit concerned, right? I mean, our debt is certainly not 0%, and we have some significant, we're not institutional buyers by any means, right? So we pay a premium on our debt, but it also allows us to do these deals. And with that being said, right, I mean, I think if I went up to any of my investors and said, hey, we're just going to raise rents, not do anything, and they probably would be a little bit concerned right off the bat. And if we can share the story behind what's actually going on, and if it does make sense, I mean, there's been properties that we've bought, right? We actually haven't done anything and raised rents. And that the only reason we did that is because market rents were basically $100 to $200 higher, right? I mean, that's a significant gap. So even if you increase it by $50, I mean, it's not outrageous. I think at that point, your valuation of that property actually still goes higher. And at that point, you could start doing those little renovations or the outside or, whatever it is that needs to happen at that property.
Mm-hmm. Well, it's been really interesting for me is, my first deal when I moved down here was a 16 unit. When I took over, the rents were $875, and now we're spending $15,000 a door renovating. But what I'm doing is as leases are becoming vacant, offering a renewal rate that I felt was a little higher than market, so that it's like, hey, you can stay if you want, but most likely people are going to say no. I've had 2 people turn around and say, hey, I really can't find anything for cheaper, and I like the place and you guys do a good enough job that I'll just stay. And I'm getting much more than I thought I would, because it's just, since the time I bought it to now, it's just, there's no other choices, right? That, things are just renting for more and more and more because so many people are moving here and there's so much limited supply in the market, and any supply is just, luxury A-class stuff that, it just kind of is what it is. So it's also interesting to see for me that kind of play out over the last 4 or 5 months of like, I didn't really think there was a ton of room. And my goal was, without renovating, right? And my goal was to come in and do that, where now I'm like actually where I kind of expected maybe one or no people to take it. Now it's kind of like, well, people are seriously considering it.
Yeah, I mean, I think that's a really great point that you bring up. I mean, are you guys investing more in the Class B, Class A properties, or is it Class C and below? And then, the tenant base, are they impacted by COVID or the pandemic or anything like that, or has it just been pretty flat? And
so this one specifically, I would say is like a C-ish property in a B minus submarket. I mean, John, you can correct me if you think differently, but definitely needs some work done. It wasn't like it was just come in and do nothing. We're repiping all the units. It needs plumbing work, needed some lift as well. So we were like, okay, this property needs some love. It's 55 years old. But yeah, I would say it's, more workforce, blue collar, paycheck to paycheck people. And it's never going to be a luxury type area. And that's kind of what we've always done, very similar to that BC stuff, 60s to 80s built type of
Got it. Yeah, I mean, we're in the same boat, right? I mean, we primarily invest in B minus, C plus type of properties. I think the probably the lowest end on it we've probably gone is lower C class, and which is really surprising in the mobile home park investing side of it. Is like these assets are phenomenal. I mean, the pandemic really hasn't impacted us all that much at all. I mean, I think we're still at 95% collections. We're almost at 90% occupancy. We've only had maybe 1 or 2 evictions, and those are some just really bad apples, which I'm sure in any class you'll have some bad apples. But outside of that, I mean, we've still been able to perform strong. Our investors are still seeing their returns as well as us. So it's been a positive. We've had positive momentum so far, and then we're still continuing to grow organically. By adding assets to our portfolio.
We just did the exact same thing. We have a mobile home park outside of Charleston, South Carolina, and we bought it. The lot rent was $135. We started landscaping it when we closed, and we said, okay, new market rent of $225. And we had a ridiculous amount of interest. And even on renewals, we sent out renewal letters, and we're getting $300 as our lot rent with no pushback. Now tenants that have been there for a while, obviously you can't raise them to that, but we had such interest at 225. We just said, okay, let's try 300. And the interest was still there. And even the renewals, when we sent out the renewal letter saying that rent was going to 200 from 135, tenants were thanking us for fixing up the property, and because they really can't go anywhere else. It just doesn't exist. The affordability component in that mobile home space and or that C and B class apartment world it's basically non-existent. So you don't have a better option. I mean, Chris knows the deal that he was talking about in Jacksonville. We have another site where we budgeted $8K a door for renovations to get rent increases. We're spending $4,000 and we're getting more than what we thought we would get for the $8,000. So it's been wild. And the question I have, and I will ask it is this the new norm? Are people going to be making mistakes when they underwrite going forward? Or, how are you guys looking at it going forward? Like we said, you can't show an investor we're spending no money and raising rents, although that's what's been happening for the last blank years. What are you doing going forward to prevent? How are you going about that, right? What are you showing investors, or what's the story you're telling, or how does one feel really confident about that situation?
Sure. Yeah. I mean, that's a really great question, and some folks may disagree with what I'm doing, or they may have different opinion. But for us, it's really just sharing the story of, look, like in the mobile home park space, especially that mobile home park space, right? The reason we call it recession resilient, or quote unquote a little bit more recession resilient, is really the fact that if you want to live in an apartment building, or get a class D, you can take D or a C, right? I mean, D is pretty bad, but especially in these major metro areas, you're not going to find anything that's an apartment that's $300 or less, right? Especially if it's 2 bedroom or more. It's just almost impossible. So if we're doing lot rents at 300, or whatever that number is, I mean, we're still below market for what an apartment building is going to be. So we want to maintain that balance, right? What we do is we want to see, my partner Jack Yen, he's a data scientist. He runs all our numbers and does all that research for us. It basically pulls all the data for each county that we invest in. So the way he goes about it is, how aggressive can we get on the lot rent, right? What is that maximum number? And then, for compared to if they were to go to a different mobile home park. And then what is the comparable if that tenant was to move into an apartment complex? So for us, we're basically underwriting pretty competitively, in our opinion, and making those offers in a competitive way, instead of just throwing out, hundreds of offers a week, or multiple offers a week. We're targeting those that really just need some love, those value add properties. And we've seen some great success. I mean, we've built a number of great relationships with some brokers. They see what we're doing. The big thing here is we say one thing and we execute on that thing, right? So if we've had that track record of doing this numerous times for our investors, for the brokers, for everyone that we've built these relationships with, even our lenders, right? We're paying that debt down and committing to what we're saying we're going to do. And because of sorry. Yeah, and because of that, I mean, that's the reason we've been able to get a little bit more competitive. But again, there's just no way we can go in at 3 cap and stuff like that. The outrageous just numbers, unless there's just some significant value add play, right? I can see us going into a 6 cap and saying, okay, well, look, we're going to do these XYZ things, maybe spend 50,000 or 100,000 landscaping, and maybe clean up the property, but outside of that, I mean, and raise the rents a little bit, but I have a hard time, going in and saying, okay, hey, here's a 6 cap, I'm not going to do anything, and then just all of a sudden raise the numbers all to an outrageous number. I think the tenants will likely push back as well. And we actually tested this, right? So we have a property in Zebulon, North Carolina. We said, okay, we purchased it when this was one of our first properties. So we actually didn't know, hey, how to structure the rent increase properly. But we went up to the on-site property manager. We said, look, the market's this. I think it was probably 350 at the time. Rents at the park were maybe 265. We said, let's just go up $25. We don't want to overburden these tenants. But even though that $25, that nominal increase, still gave us pushback. And that was really unique because, I think it was just the tenant class that we had there, and the fact that we didn't do anything, right? I mean, we went in there, we were like, oh, hey, we're these new owners, we're going to increase this by $25. They're like, well, why do you want to do this? You didn't do anything. And that's when we said, okay, hey, let's take a step back. Let's pave the roads. Let's do, some certain value add items that at least help the tenants. We want to build a community, right? I mean, I early on, we've learned this pretty quickly, because building the community is super important. And if your tenants are on your side, they're going to be okay. They're going to pay. They're going to, figure it out. Even if they're going through a hard time, we'll help them and retroactively work with them to see, what the next steps are for them.
Mm-hmm. Yeah, I think the one thing that you've touched on a couple of times, I think people don't think about a lot, is the tenant experience. And not only from what am I getting at the property? What are the amenities? But part of that experience is deciding, is where I'm living worth the money I'm spending? Whether you own rent, a combination of the two, like the mobile home stuff, like, people look and say, okay, like, can I find something better? Can I spend more or spend less and, feel better, right? It's I don't want to say risk reward, but it's like a cost benefit type thing of, hey, do I feel like I'm getting good value for what I'm spending? And, positively or negatively, am I going to make a different decision? So it's when you just come in and nothing changes and you increase, there's going to be more pushback because it's like, hey, you're just, a new shitty owner and you're just jacking rents up. But even if you do little things to make it better, that goes a long way, unless, there's a massive delta and the new rent is still far below anything else. That's a different story. But, doing some of those things, even just like showing up, showing your face, doing little things, depending upon what the old ownership did, those things can make a difference. So, you just want to make people feel like they matter in one way or another. They don't want to just be treated like, just a dollars and cents. So I think that's what you've touched on. I think people kind of forget that it's like, yeah, we're in the real estate business, but you're also in, the people and service-based business. And, you've got to keep that in mind as you do things.
Exactly. I mean, that's definitely, without a doubt, right? Whether, especially during the pandemic, I mean, people lost their jobs and it's incredible, it's super unfortunate. People are dying and all this different stuff is happening. We made an effort, right? We told our tenants, hey, look, like if there's a specific situation you're going through, come talk to us. We want to know, we want to help you. It's not just pay your rent on time, and if you don't, we're going to evict you kind of thing. It's not right. I mean, for us especially, I came from nothing. My family came from nothing. We built this, empire and built this portfolio that's been awesome, right? But I understand, that time when I was flipping houses, I literally didn't have a dollar to my name, and we were literally just trying to scrape by. And a lot of these tenants are doing the same thing. Luckily, for me, I didn't have kids. I was unmarried and a bit younger at that time. But a lot of these folks are 50, 60 years old, and they're struggling. And for us, we want to do everything we can to at least support them.
Mm-hmm. So I guess one thing that'll be interesting too is when you're, because I know less about it, when you're looking at the mobile home park stuff, how do you weigh up like what things to do? Because one thing that we always talk about on the multifamily side, right, is it's much easier to come in and say, hey, I'm going to do cabinets, countertops, flooring, and I'm going to be able to push rent $200 right there. Because there's a unit that has the same exact thing down the road. It's very similar and it's $200 higher. So you're like, okay, that makes sense. We always talk about like, okay, what is the rent premium for a dog park? What is the rent premium for a pool? Like that stuff is harder to do. And when you don't own the parks, you're just renting out land. How do you look at that stuff and feel confident in, knowing what the market rent is or what you can push rents to?
Yeah, so that's definitely a great question, right? So what we do is we do a comp analysis of what the other parks look like, right? So we'll drive to another a competitor's park, right? We'll say, hey, this park maybe 2-3 miles away from here looks like this, and what does our park look like? So really good example for us was we have a park in Zebulon, that it was about 40 units, and this park it had really crappy roads. There were some really bad homes in there. The previous owner wasn't really taking care of the overall land and the curb appeal of it. And so for us, we were like, okay, well, there's a park, basically a few miles down the road, and it looks really good. It's paved and there's, there's not crappy homes in there, and what we want to do is try to fix up whatever we can, right? So for us, the big thing was paving. Yeah, that was a probably major capital expense for us, right? I mean, that's I think for a 22-acre park, right, it probably cost us almost 60,000-70,000 loan just to do that, right? So that was a big thing, because especially when it rained, a lot of our tenants would get stuck. Like their car would literally get stuck in the mud. And I think a lot of tenants saw a lot of value in that alone. And then the next step was, curb appeal, trying to put a sign up saying, oh, hey, this is the park name, and this is the on-site property manager's contact. Touch base with them, whether it be we can expand this park, or it's really just looking at the comparables and also doing everything we can to increase curb appeal. For these mobile home parks, we own some of the mobile homes, and we want to at least provide safe and affordable community housing, which whether it be if someone moves out, we'll clean it up, we'll make sure it's a good home. At the same time, a mobile home is considered personal property, right? So it's a depreciating asset versus an apartment complex, right? You have units, and they're probably going to be going for 70, 80, 90, 100 plus thousand a unit. All right, for these mobile homes, we're underwriting them between 5 to 10,000, just depending on the year and the model. So a lot of it's just making sure that these are livable and safe units to be occupied, and if they're not, take them out or renovate them and kind of move forward from there.
How because obviously that approach is that's the blueprint for anyone listening, right? If you go about that, when you find something, it's down the fairway, we're doing the same thing on our site. It's a disaster. It's clean up, paving, landscaping, and the sign first. Yep. Being an engineer and a partner being, with the data science background, short of telling us your secret, but what can you guys speak to that you guys bring to the table where someone listening could say, okay, that's a great, I have to find that partner, or I can provide value because I know how to do this. But those two people coming together, obviously super compelling, because you can use the data, the research, everything that's out there, and then the engineer background just being super organized and detailed. But what are, when you guys came together and you're doing your thing, what are things that you guys look for that people could look for? I know you touched on it earlier, but how does that come together to form the perfect storm to find that perfect park to go execute on?
Yeah, so I think it's twofold, right? First, finding that perfect quote unquote perfect partner, right? I've had a number of different partners that we've worked on deals together, and some were great, some were not great experiences. And really understanding and communicating and being open, I think that's the first step, right? If you're the type of person who wants to not be transparent and hide the numbers and hide behind that spreadsheet, that may not be the best partner to line up with. For me, I love communicating about exactly what we're going to do, what the plan is, and the numbers are one thing, but I also have to like the person I'm going to be working with, right? Especially if whether it be an investor as well, right? We're taking on these larger deals, and if there's an investor who is just consistently unhappy and has multiple different asks that are just unreasonable, that might not be the investor that we want to take on. All right. So at that point, we've gotten to a spot where we can identify, okay, well, these are the things that we're looking for from an investor, from a partner, from a GP, et cetera. And I think that secret really comes through just by being open and communicating. Communicating what our needs are, what we lack, and then what the strengths are, right? So for me, like you said, right, I'm the engineer, I understand the operations side. I'm able to put together those processes in place at our apartment complexes, at our mobile home parks, and it's more of a process oriented task. But then on the back side, Jack's working on that acquisition side. He's increasing that pipeline flow. Where are our deals coming from? He's working on that process and doing that research behind that. So that's been really, really beneficial for us. My big thing for anyone who's looking for partners or mentors or anything like that is understand what you bring to the table and what you can provide value for others, and then see where you need help. Right, whether it be underwriting, maybe underwriting is not the thing that you like and enjoy doing. See if there's someone else who can do that for you, and I think that helps kind of align people's goals together. If you're providing value and this other person is providing value, and your other partners, investors are providing value in one way or another, that's awesome. it's going to create that, perfect deal flow. It's going to create that pipeline that you're probably looking for. And then applies, when you're invested in these deals, right? I mean, you don't want to be invested with someone that you absolutely despise, and all of a sudden you guys are fighting about money and things like that. I mean, these get really, really complicated very quickly. Everything's great, especially when it's going well, but what happens what's going to happen when things don't go well? Right? You want to understand that and peel back those layers and talk through that.
No, 100%. I think that makes a lot of sense. From a standpoint of comps, because the mobile home world's tough, right? It's a very undatabase market class, right? As you get bigger in size, there's more research available. But what do you guys use, or how do you go about finding what appears to be a comp, or what do you guys use from sitting at your desk, right? Without getting into the market and driving, which is ridiculously critical. What do you guys use to find other parks that would be, quote unquote comparable, where someone would live if you didn't have a vacancy or if they saw two parks? Like, how do you guys go about finding what would be considered a comp in the mobile home space?
Sure. Yeah. And I'll be transparent. I mean, a lot of times we do struggle with this, especially in the mobile home park space, right? I mean, it's just we don't have access to what is it? CoStar, and we're not paying the thousands of dollars to utilize that machine basically. But we do have Deal Machine, and that's been a really good resource for us. We'll find out the information to the owner, and that also helps with our our deal pipeline. But what we'll do is we'll basically Google the top 5, maybe 10, depending on what the market looks like for mobile home parks in that area. So within 20 miles, 20 to 30 miles. And I know that's a sin in residential real estate, right? If you try to get a comp within 20 to 30 miles, that's pretty outrageous. But in the mobile home park space, you kind of need to do that, just because mom and pop down the road might be charging $130 for lot rent, but in reality, they're not the market driver. The sophisticated investor, that might be 15 miles down the road, is the market driver. Maybe they're at $250, and that's kind of where we're headed at. Where we're like, okay, well, what's the middle ground? Obviously, we have mom and pop at 130. You have the sophisticated investor at 250. Let's just say 200. I think that's a good starting point. A lot of it's really just making phone calls, saying, hey, look, there's no way I'm going to be driving to all of these different parks and things like that, as much as I would love to. But at the same time, there's only so much time in the day to do these things. So a lot of it's just making a phone call, seeing if we can touch base with the management office or the on-site manager or whoever is kind of running the leasing side of it, and saying, hey, look, we're investors. We're pretty upfront. We're looking to understand, what the going rate is for lot rent. And sometimes people are super open about it. Sometimes they're like, hey, F off, I don't want to give you any of this information, which happens. And at that point, we get a little creative, and we say, hey, we're possible buyers, or we want to bring our mobile home in. And then people are a little bit more receptive. So there's definitely different ways to go about it. I'm not really a fan of being kind of lying and stuff like that, and being elusive on this stuff. But at the same time, it is a business, and you need to understand what those comps are. And if you don't, you can really, really shoot yourself in the foot.
No, I think that's important, because people have to realize that the mobile home world is different than the apartment world or single family house, where your comps are on your block, right, and sold stuff. You got to expand your net, and you got to get in, because you're dealing with a very mom and pop business. So having the ability to pick up the phone, one, it's very difficult to get them on the phone if they even answer, but use it as an opportunity. And then simultaneously, like you said, you just got to get into the weeds and figure it out, because it's not download CoStar, log on to apartments.com. It's a little bit harder to find. So anyone listening, understand that it takes a little bit more effort to truly understand that space in the comps. It's not just maybe using a data science background and pulling average incomes, like that's great, can point you in the right direction, but really knowing what the comps are doing is going to, open up the door to, how you underwrite going forward. So I appreciate you, divulging that and telling people.
Yeah, exactly. I mean, I don't think I've ever used Zillow and Trulia and all these different, for free programs on online just to find these comps. It's very, very difficult, and it's really just getting on the phone.
Mm-hmm.
A lot of it's also, working with your local brokers or folks that you have relationships with, especially that are focused in on mobile home parks. They're very, very helpful. I mean, I feel like the mobile home park space is, I've met the most helpful folks through Facebook, through these different, forums and things like that. Definitely get on there. I mean, it's phenomenal. People will help in any way, possible. I think it's a great community.
Mm-hmm. I think one thing with comps too, that a lot of people don't realize is it's not like an exact science. It's not like, hey, there's this property so I can get X, right? Unless you're in like a Brooklyn or a Philly or something where you've literally got just a block of dozens of the same exact building right next to each other. And it's like, hey, I bought this one and the one next door, they did X and I'm going to exactly replicate it. You can't really do that, right? Even when you have 200 unit properties, you may have to go a few miles away or, around the corner, and that can change things, right? Just going over a highway sometimes can affect things. And as you get less and less sophisticated, like you said, you may have to go farther away. But I think what people need to realize is, okay, let's say you find a park 20 miles away that you can exactly replicate. It's still a different part of the town. So you still have to be a little bit conservative. And then you also have to run scenarios too, right? Like let's say you're going from 200 to 300 on lot rent. Don't just look at it at 300. Look at it as both like 250, 275, 300. Also look at it at, 325, 350. And, when you're raising money, you don't put all those scenarios in front of people, but you yourself as the person underwriting the deal, looking to purchase it, you want to look at those different things. So at least you have a decent understanding of like, okay, I have to get at least 250 because otherwise this deal isn't worth it to me. And then you kind of say, okay, I really, really think we should have a very easy time of getting at least 250 because this other one is getting 300 and it's really not that different. But I understand maybe there's something I'm missing and I could miss, and 250 is a good margin of error for me. But you may also say, look, I think we can get 300, but I really think there's a chance we can get 325 because there's, a Walmart across the road and the other one doesn't have that, right? Something like that, which is, I know, a big thing in the mobile home community. Things like that it's not like an exact science. I think sometimes people get caught up of like, oh, I've got to put this number on paper. It's like, yeah, at some point you've got to put a number on paper, but you want to just stress test it both to the negative and the positive and really understand how does this deal perform if stuff happens. And John has said this before, the more things that have to go right for the deal to work, the riskier it gets. And, you just got to be careful. So when a deal is, hey, we just, we think we can get 300 and, 50 just by throwing up a sign and some asphalt, that's not a very risky business plan. If you say, hey, we've got to get, 50% more lots approved, we've got to put it in for, 30,000 a unit and the utilities are all the way away. And, then we got to push lot rent. Those are the more things that have to go right to make a deal work. I think, people got to be careful with that.
Yeah, I mean, I think the utility side of it is huge, right? I mean, especially in mobile home parks, right? You could have private utilities, right? You could have wells, you could have lagoons, you could have septic tanks, and that plays a role as part of that underwriting, right? I mean, you have to have reserves. I mean, it is a little bit more risky, right? When you have a well and you have a septic, or if you have some sort of other private utility where you're taking care of it, right? The city's not, managing that side of it. So, having that is and having that understanding, and also having the professionals that kind of work with you to understand what's going on with that well. All right, I mean, by no means am I an expert on septic tanks and wells and all these different things, but having the maybe a little bit of background on it, but then having professionals that can look at it, inspect it, make sure what you're buying is actually going to continue to work. Because if one or two or three septic tanks go, break or whatever happens, that's a pretty significant capital expense. I mean, we're talking, 8 to 10,000 per septic tank. And if you have a smaller park, or even if you have a bigger park, that cuts in quite a bit on your net operating income.
Now, understanding that component is extremely important because, we looked at a deal that was a perfect deal down the fairway, started making calls, and 3 septic guys said, well, we know the park, we bid it out. You're going to lose 3 lots when you go to fix the septic tanks because you got to move the location and you're going to have to take away homes. So what was a really good deal at 40 lots, when you have to fix the homes and you lose 3 or 4 homes, well, now it's not a 40 lot park, it's a 36 lot park with a major capital expensive septic. So, understanding all those components, as Chris said, what has to go right for a deal to work is important. The more that has to go right makes that a significantly, larger ask. So understanding that component is what I think is one of the major drivers behind a deal, is that, you don't want to reinvent the wheel, right? That's not what we're doing. You want to buy super solid real estate with good fundamentals that minor tweaks make major differences, as opposed to reinventing the entire, surface you live on to get a marginal return. So, understanding that is going to make a huge difference going forward for anybody looking at any deal, no matter what it is.
Exactly. Yeah.
100%. There was a 12 unit deal I looked at here not too long ago. And the reason I didn't do it for some other things, but one of the major things was it was a septic, and I've never dealt with that before. And it's very rare that you find apartments not on city water sewer. And it wasn't like it was far out in the middle of nowhere. It was surrounded by other residential stuff. And, it was the type of deal that everybody hears about. It was, the husband and wife had owned it forever. They're local. They had no mortgage. They're willing to do seller financing. It was, pretty good, ratio of price to rent. But I was just like, it's 12 units. I was like, God forbid I don't know what I'm stepping into, or something goes wrong, or I need to reconnect it. I was like, that's just something I don't want to deal with. Like, it's just an extra unknown. And the deal wasn't that good that I was like, okay, I can deal with that, or I'll figure it out in the future. And, I think those are the type of things where some people get caught up in, and, they don't properly weigh up of like, hey, what is like the downside of this, and what's the potential problems, where it's, city water sewer, once it hits that meter, at least here, it's the city's problem. They got to figure it out. If it's on my side, yeah, I got to figure it out. But typically the meter's not too far from the building. So it's not a massive difference, where if the septic goes, well, that's on me and I got to figure it out, and the residents are going to be up my ass and I can't explain to somebody else. So little things like that, especially in the mobile home world. And I know a lot of people just stay away from, well and septic and just look for city water sewer, is a big thing. On the flip side, if you can figure it out and understand it, have confidence, and there's, a good amount of reserve or margin, that could be a really nice value add piece that you're talking to of, I don't know how typical it is to reconnect to city water sewer. And I'm curious if that's something you've ever looked at as like a value add component, but I got to imagine, you pave roads and you connect to the city water sewer. If it's a decent sized park, that's probably going to add a ton of value to somebody.
Yeah, without a doubt. I mean, having, we'll run an example, right? So if you have a well and septic, where we're typically looking price 6.5, 7 cap, maybe 8 cap, just depending on the market, just because of the risk, and things always can go wrong with the well and septic side of it. But if you have like a really clean park where it's city water, city sewer, tenant-owned homes, and your expenses are probably very low, or relatively low, I mean, you can get a premium. You can get a significant premium, especially on the sale of the property, right? I mean, a lot of investors are buying those at 4 or 5, maybe high 5 caps, and when you do an evaluation like that, I mean, there's significant value. But at the same time, for me, if I was to do a conversion from well and septic to city water sewer, you have to underwrite that understanding, because that likely that whole connection and doing that type of value add component likely will cost quite a bit. I mean, it could cost upwards of 500,000, just depending on where the closest pipe is, and there's going to be some zoning permits, and it does become a very, very large project.
Mm-hmm. Yeah, it's the type of thing that can sound great on paper. Well, once you actually start figuring out the numbers and the process and actually doing it, becomes a lot more effort than it's work. And just because, let's say you could juice a return from a 15 to a 20, well, the amount of, where John was saying, minimal tweaks to maximize, value, you may triple or quadruple or 10x the actual risk, and you're not getting a lot more juice for the amount of risk you're adding. So like, I'm happy you brought that up, because I know the cost and the ease of doing it is not something that can just turn around. So, I'm sure anybody looking at it was just like, oh, I'll just, connect to the city. Like, it's not always that easy. You got to figure out where it is, what the process is like. And I think too, sometimes you can even run into like capacity issues where, if the pipes are only so big and they can only handle so much, you may physically not be able to connect to it unless, they're going through an upgrade plan, especially if you're in these areas where, a lot of people are moving in, there's a lot of new development, a lot of new supply coming in. The cities may not have planned for that, 20, 30, 50 years ago, whenever this stuff was put in, depending upon the area. I don't even know, it could be older, it could be 100 years. If can't handle it, they're not going to let you connect. So, it's something to be considered as well.
Yeah, I mean, that's a really good point. I mean, we have a 200,000 square foot office building in New York right now that we're looking to convert into. There's obviously that main building, but then we're looking to add another building on the backside, because it's just a massive amount of land. And obviously in Long Island, New York, right, land is just it's hard to come by.
Mm-hmm.
So what we were looking to do is basically add a second building. And then have those as just basically an apartment complex, or have apartments there. And the city basically comes in and says, hey, well, even though you guys have that connection line for sewer coming underground from that main building, trying to go to building number 2, we just can't do the capacity. It's meant for an office building, right? So in an office building, you're typically not having people shower, use the restroom as much, and you're not living there. Completely separate pipes, right? I mean, the size and everything just has to be completely changed out.
Mm-hmm.
And we're super happy that we actually asked the city about this, and we have the right contacts in place to ask those questions. Because if we went ahead and said, okay, hey, let's just go ahead and move forward with this project and start spending the thousands and millions of dollars to actually do this renovation, do this infill or development, it's not going to be a fun ride. We would actually lost quite a bit of money on that side of it.
Yeah, at the end of the day, it's one of those, it's a lot easier said than done. For everything that Chris just mentioned and that we just spoke about, is the capacity, the size, the unit count, and all that. So understand that brokers and sellers are going to sell expansions and conversions to city utilities. It can be done, no doubt. Understanding that a lot easier said than done is a major component of any of those changes, whether it be an office conversion or not, because you're converting something that was not what it's going to be. So there's a lot of things that have to go right. So I'm not saying that you can't do it, because it can be done and will add tremendous value, but exactly. Understanding that, ask the question first before you start breaking out concrete, thinking you're just gonna, we're gonna connect 2 pipes with some glue and boom, city utilities. It doesn't work that way.
Yeah, exactly.
100%. But I think that's a great place to wrap up. So perfect. Thank you so much for coming on and sharing your thoughts and insights and experience. If people want to learn more about you, follow you, get in touch with you, all that good stuff, where's the best place to do that?
Yeah, reach out to me on LinkedIn. Let's definitely connect. I'd love to add value to whoever wants to connect and see how I can help them, and vice versa. My name is Apurva, Apurva, last name Shah, Shah. Also check out our website, jaysinvestments.com, JAYSINVESTMENTS.com. So, great place. I mean, you can click contact us, and usually we'll filter directly to our team. So definitely the 2 best ways to get in touch.
Perfect. Guys, definitely go do that. Go check it out. Go connect with him. But thank you, everybody, so much for listening to this episode of the podcast. If you're not already subscribed, it would mean the world to John and I if you would do so. And if you are, please send it to someone that would get a tremendous amount of value from this episode. Once again, Bud, thank you so much for coming on. This is great.